want to maximize your savings while working from home? Well, then tune into this video because we are going to be talking about all things home office deduction. Before we dive into the details, don't forget to hit that subscribe button, turn on your notification bell so you don't miss any future tax savings tips. My name is Linda Tuttle, and I help entrepreneurial women maximize their income through tax savings and business systems so that they can live life to the fullest and be prepared for retirement. I want to address a couple of things. First of all, if you are only a W-2 employee working from home, unfortunately, this video does not apply to you. Tax laws changed in 2018, and even though the workforce, so many people are working from home these days, the tax law is still written so that it benefits those who have their own business. So you can be a W-2 employee and have a side thing, and if you don't, I highly encourage it because that's what opens up these benefits that we're going to be talking about today. Second thing I want to address is that taking a home office deduction does not automatically mean that you are going to be audited by the IRS. Now, I will tell you, even though I'm a tax preparer for many years, I was of that same mentality. I thought, oh, I don't want to draw any extra attention. I'm not going to worry about this home office deduction. But I want to tell you, I want to just bust that myth that this is a legitimate deduction for you and your business. Now, with any deduction, the key is to document and keep good records so that you can take these deductions with confidence. So I want to say that right from the beginning, that this is your role as a business owner to maximize your income. This is a legitimate deduction, and now more than ever, this deduction is even simpler. So that brings me to my next point, that there are two ways to take the home office deduction. The first one is simplified, and let me tell you, it is just that. It is simple. So you figure out what your office square footage is, and you multiply that times $5 a square foot, up to a total of 300 square feet, which gives you a maximum deduction of $1,500. Now, like I said, this is simple. You don't have to keep track of every receipt. All the details for what we're going to talk about on the next method. It really is just take the square footage of your office, multiply it times that $5, you've taken the home office deduction. Now, one caveat with that is you do need to have profit from your business. If your business is showing a loss, you cannot take the home office deduction. The second method is called the standard method. This has been around for years, and this is the one that I personally was afraid myself to take for a long time until I did a little bit more research on it. And that's why I'm sharing this video with you, because I want you to not make the same mistake that I did. So with the standard method, it is a little more involved. You do need to keep documentation. You do need to keep receipts. You need to be more thorough in your record keeping because it's taking your actual expenses for rent, mortgage interest, property taxes, if you have an HOA fee, if it's landscaping, repairs to your home office. What you do on this method is you take the total square footage used for business and divide it by the total square footage of the home. That gives you your business use percentage, and then you take all of your actual expenses and multiply it by that percentage. Now, the nice thing with this method is that you can take this and get some of those home office expenses even if you are only taking the standard deduction. So for example, if you don't have enough expenses to itemize and your standard deduction is $24,000, even though you own a home, sometimes, well, a lot of times taxpayers miss out on any benefit from owning their home because of the changes to that higher standard deduction. But with the business use percentage, you are actually taking that percentage of, like I said, the mortgage interest, property taxes. The other big thing to keep in mind with the standard deduction is you do get to benefit from depreciation. That means you are writing off a portion of the value of your home over a number of years. Attached to this, which a lot of people, this is what holds them back, is the way the tax law is written. You can have, as a married couple, a gain of up to $500,000 on your home without paying any taxes. However, if you take the depreciation, then you have to recapture that as a gain when you go to sell your home. So I know that gets a little bit complicated. Be sure to talk to your tax professional about this. So, how do you choose which method is best for you? Ultimately, it depends on your situation. It depends on whether you are a diligent record keeper and want to make sure you're tracking every individual expense, or if you just really like the simplicity. The pros of the simple method is that it really is, like we talked about, it's simple. You don't have to have all the documentation. The con on that method is that often you can get more expense if you are taking the standard deduction. Again, the maximum on that standard deduction is $1,500. So what are the pros and cons for the standard method? Kind of covered it, but the pro is that it's often a higher deduction, allows you to take advantage of some of those expenses of owning a home even if you can't itemize your deductions. The cons, like we talked about, are that it really is a lot more detailed. You have to keep your records. Now, I wanted to bring up another point that a lot of people are not aware of, and I want you to know this comes straight from the guidebook put out by the IRS on this topic. But a home for the home office deduction can be an apartment, a condominium, a townhome, a home, a mobile home, even a boat. A lot of people are not aware of this. Something else I get asked all the time is, can I take 2 home office deductions? Now, if you, let's say, have a business and a rental, you can't take the same square footage, the same office deduction for both the business and the rental. However, you could split it, so you could take $750 on the business and $750 on the rental, Schedule E and Schedule C. Or if there are 2 people working in 2 separate office spaces out of the same home, you can actually take 2 different deductions. So let's say one spouse has a Schedule C and the other spouse has a Schedule C. You can take it for both spouses if it is different office space. Generally, there are 2 requirements in order to be able to qualify for this home office deduction. The first is that the space in your home must be used exclusively and regularly for business. So, for example, if you have a second extra bedroom in your home that is used as your home office, that qualifies. But even if you have a space like within your bedroom and you've got a desk and it's all set up to be a workstation, you're not going to take the total square footage of the home, but you can take that allocated portion. I suggest not taking like your kitchen table. That's not exclusively used for the business. That's kind of the main thoroughfare for your family. And so want it to be exclusively used for business. The other part is that it needs to be your principal. Generally, it needs to be your principal place of business. Now, straight again from the IRS guide, it talks about an exception to this. So if you have an actual office location, but you used a space in your home for administrative work when you are not at the office, that can still qualify. Now, I will tell you, there are a lot of tax preparers out there who don't even like to touch the home office deduction, and especially would argue with you on this point, but that comes straight from the IRS guide. So, all of this being said, take advantage of this deduction, because at the very minimum, it gives you a $1,500 deduction if you are using that standard method. If you want to be more thorough with your records and take if you take the simplified method, it's that $1,500. If you want to be more advanced and take the standard, your deduction can be significantly more than that. Either way, it's to your benefit. You are running a business from home. This is a legitimate deduction. Talk to your tax preparer about the specifics for your situation, and don't let your tax preparer tell you that you should not take this deduction. I'm here because I want to help you as an entrepreneur to maximize your income. So I put together a free guide that you can grab in the show notes down below called 9 Foolproof Ways for Online Business Owners to be More Profitable. Touches just briefly on the home office deduction, and then also gives you some other ideas of other deductions that you have available to you. So comment below if you have questions. Let me know if this was helpful, and see you next week.